what's the expected playbook for this market as we get back, as we get into the deeper end of the year, in the second half? Let's get Ayodeji Ebo, who is a CEO at Afrinvest Securities, to talk to us. He's live to us from our Lagos studios. Good morning, Ayodeji, and it's good to have you on the program this morning. Look at where the market is right now, the equity side for us, and let's have a bit of a drill down on what you can call the key ratios, the key analysis, and the strategies moving forward. If you give us a Pan-African view of where we are at the moment, how does Nigerian equities look?
Yeah, interesting. We've seen the downtrend in the market even in the last few weeks on the back of sell-offs across emerging markets, so not peculiar only to Nigeria. But looking at in terms of valuation multiples, if we compare based on valuation in terms of price to earnings and price to book, Nigeria currently trading around 10.6 times price to earnings and around 1.7 times price to book. And when you compare that to some other African markets, the Kenya market is still around 20 times price to book. You look at even the South African market, which is still around 15 times price to book. So we looking at in terms of pricing, the Nigerian market still presents opportunities, still relatively cheap compared to other African markets. So this shows that there are upside potential. And what we've seen most investors, what they've been doing is to take advantage of stocks that are shedding significant weight. So what we are seeing is not like a seller's market that investors are all trying to just exit the market at the same time. But you would also see that some of those stocks that are touching new lows within the last 8 weeks, in the last 50 days, you see investors taking significant interest in some of those stocks. You mentioned earlier in terms of GT Bank. You look at Zenith, even First Bank, when it touched 9.75 kobo yesterday, saw interest in some of those stocks. So what investors will be watching out for, there are a lot of, they have been very cautious ahead of election, as well as the exit of some portfolio investors. But we still feel for stocks that still have strong fundamentals and have also presented consistent in terms of payment of interim dividend, final dividend. Investors will take opportunity to buy them at very cheap prices compared to where they were in the last 3 or 4 months.
Look at these two strong pillars. On the fundamental side, on the macro side, Nigeria is strong on consumer goods and industrial goods. Yes, a bit of a play there if you look at the cement makers and the construction giants, just about 1 or 2 listed on the market. But so these two subsectors, what's the play here when we continue to see this sell-off? And again, a bit of a bargain hunting, if you want to put it. Look at Dangote Cement yesterday, about $1.4 million of transactions, but Lafarge lost a little bit on the counter. So if you look at these two sectors, what are the foreign portfolio investors trying to play here?
Yes, looking at it month to date, the last 6 trading days, the consumer goods sector, as well as industrial goods, has shared about 5% and 3% respectively. And looking at it year to date, shared about 20 and I think 25% respectively. But beyond the banking space that the foreign investors play significantly, consumer goods and industrial goods are also sectors that we know they hold significant significant holdings in that particular sector. So the sell-off that we're seeing is as a result of some of the foreign investors that are trying to reduce their exposure to emerging markets, trying to, ahead of even 2019 general elections, some of them are also trying to move their, based on what the appreciation the market has recorded when you compare it on a year-on-year basis, trying to take out some of their, book some of their gains and move it to safer investments. We are all aware in terms of outlook outlook of fixed income instruments in the U.S., yields are rising, and for them, they are more comfortable with the lower yield, though we know in terms of FX have been very stable. Liquidity has also been fair enough, but because of some political uncertainty, some foreign investors prefer to reduce their exposure. But we've also seen interest from also some major foreign investors. So what we've been seeing is not like a seller's market, but on a net basis, we've seen more of these foreign investors selling than buying. So they are very cautious. Is when they see that the opportunity, Nestle going down, breaking 3-month low and 6-month low, they take position in some of those stocks, because when you look at in terms of fundamentals, for most of these companies, they still have very strong fundamentals. When you look at their Q1 result, we're expecting Q2 result anytime from now. That is also going to shape in terms of direction in the market in the coming weeks. But we'll continue to see the mixture of... yes.
Let's move on very quickly due to time constraints. This is the second week with the new market structure that the Nigerian Stock Exchange introduced. You've talked to your traders. You're the CEO, so you got traders on the floor, online, trading through the engine. So how has this new market structure play out vis-a-vis what we had a bit earlier in the year with the new pricing methodology of the Nigerian Stock Exchange? What have we seen the trend in volume and value and the transactions that are done on a day-to-day basis?
Okay, thank you for that. The new market structure, the current liquidity that we're seeing in the market, we won't try to link it to what the current market structure presents. We've seen in terms of average liquidity or average volume in the market has declined about 24%, around an average of about 250 million units compared to last month, which was around 400 and 500 million units. Also, volume has also declined by about 39%, comparing it to last month. But what this new market structures presents to especially market participants is that it presents a fair playing ground for most of the market participants, because initially pre-open, when you don't have, for most investor or traders, you don't have control over in terms of the reference price, which does not tie to what the previous price, previous close. But currently, during trading section, stocks can move as high as 10% and can lose as high as 10%. There's also a period where you have to be sure in terms of the price at which you are comfortable to key in your trades, that you don't see the market such that you hear when people can try to, based on what they can see in the market, try to manipulate the market. So what we are seeing is it's going to provide confidence and also improve the integrity of the market. The situation we have right now is just because of some of the, in terms of participation in the market has reduced. But we know once we see interest within the market.
Ayo, a very quick one. Ayo, a very quick one. I have about 10 seconds to say this. What's the short-term strategy of investing right now in equities? 10 seconds.
I think using technical analysis will be very helpful. We've seen some of those stocks that even penny stocks, investors are still making money from this market. Though fundamentals is very key, but you also use the technical indicators to also looking at the relative strength index. The MACD will also help you to know when to come into the market and when to exit. Short-term investors are really taking position in this market. And for long-term investors, it's also time that you can also take position, but we also continue to preach caution. Don't be too aggressive on the market.
Thank you very much. Let's leave it there for today. The CEO at Afrinvest Securities. Thank you very much for your time.